going on, everybody? Julian here, J. Lewis Trading, just doing a recap here on ZYME. And what we were looking at was ZYME actually had some news on Thursday going into the close. And what we were looking for was to see if there was going to be some carry on Friday. Now, you'll see in yesterday's session, yesterday being Friday, that we actually double topped here, price action faded. And I was looking at getting into a 5-minute VWAP squeeze. So a 5-minute VWAP squeeze pre-market, you're going to be looking at something right around here. There's that last candle high above VWAP. When those things hit, there are a lot of chances and possibilities where price action can actually rally in a very, very strong way. So you can see that there's the master candle, high is above VWAP. Price action starts to make higher lows, bullish. It tests, comes back in the range. Now, when you get these tests like this, in a lot of cases, this is what suckers a lot of traders in. Market makers come in, drive prices lower, only to rebound price for it to go higher. So those first fake outs, if you're in, you should know that those first fake outs in a lot of cases turn into whipsaws. A whipsaw being a fake out, pulls back, stops traders out, and then rallies into a level. And what you'll see here is on this candle, we're taking out the high of that 5-minute VWAP squeeze candle, and you'll see that the volume is well above average. So this is a big push. And when the VWAP squeezes like this, there are a lot of opportunities. So that's where I decided to get long this stock. Now, what I was doing was I was using key levels, both on the daily and through the Fibonacci projections, and price action triple top and faded. And as soon as it triple top and faded, I knew that there was weakness here and that this thing was in a little bit of trouble. I was down at a 2-minute chart. I was monitoring this for everybody in chat, and I was paying attention to this candle. I'm saying there's a demand issue here. When you get into a triple top situation and price action is moving up into that zone, can't break, can't carry, can't hold, can't print volume, there's an issue. Never know what the issue is. I only know how to hedge the issue. How do I hedge the issue? I move my stops. And so what I was doing was I was moving stops here, and I was aggressively backing up my stop losses. Now, okay, price action is going, market's on. I'm turning off pre-market at this time. I got stopped out of this position, so let me just tell you that right there. But off the top, what I was looking at doing was I was looking at putting on a hedge trade. And what I mean is, every trade I go into, there's what I refer to as a hedge thesis. If long levels get broken, then this is how I approach. So this is thesis number one. If these levels get taken out, this is what I'm going to do. If short levels get taken out, then I build out a short thesis as well. So I'm always staying directionally neutral. I don't care if the market goes long or the market goes short. In this case, the market being ZYME. I don't care what the market does. All I know is that I'm net neutral, and if it gets long, this is how I'm going to react, and if it gets short, this is what I'm going to do. So my long thesis failed, and it happens. So then from there, I saw that price action took VWAP out, and it retested. So this is interesting right through here. What this does is it grabs my attention and says, okay, you know what? Now that it's traded below the VWAP, and VWAP has rejected price action, there's a potential that price action could fail to a lower level, and it could start to fill this gap. If not 100%, at a minimum 50%. What do? I'm going to go to the gap, and I'm actually going to measure the entire gap up to the top of the first range, and then I'm going to backtrack, and I'm going to look at one of the highest probability levels and normal levels for price action to retrace to, and that's going to be the 50. And at this point, what I'm doing is, as price action is coming off VWAP, I'm taking out the low right here. It steps down. I'm getting into some puts. Now the spreads on these puts suck. They were wide, and so the idea here is that it really had to work out. Implied volatility was also very high. So the idea here is this really had to move, or I was set to lose on the short. Anyways, price action started to trend sideways, trend sideways, trend sideways. It steps down, and then right before the close, we step below that 50% retrace. So the hedge thesis was complete. Now on this one, I lost a nominal amount on the stop getting hit up here going long. Hedged thesis says that if VWAP gets taken out, closed on, and we start to fill the gap, high probability zone is going to be that 50% retrace. So what did I do? I actually looked at buying some $5 puts in the event that this thing absolutely plummeted. And if it didn't, and it only got halfway, which it did, I would do okay. What did I do? I bought puts at 15 cents, sold them at 30. That's a 100% return on an intraday hold. So what did I do? I got long, stopped out, flipped the thesis upside down. Price action began to fill gap. I got short, 100% return. Net net, did all right.